Great piece today looking at the share loss, at least in the industry sandwich category, as a result of competition from casual dining, fast casual, and others.
Yeah, McDonald's definitely has a value perception problem. You heard in that interview that Joe did this morning that their prices went up 40% during the COVID era, and wages went up 20% for the average consumer. So, clearly the price of McDonald's in people's reality and in people's minds their value has gotten worse. We see in independent data that their value for the money scores also ranks among the bottom of the major chains as well.
So talk about, you've got some numbers on how much share they might win back if with a big national value push.
Yeah, it's going to be it's tough to predict this because there's no perfect analog period. This is not a dollar double cheeseburger anchored dollar menu. This is not a dollar any size soft drink anchored hero item type menu. This is a bundle. It's a $5 bundle. They're not unique in having this. They're kind of joining the $5 bundle party, but it is McDonald's, and they have a $1 billion national advertising spend budget per year. These guys have a very big time brand. They're a reimaged restaurant. They've done a lot of improvements. So for them to be joining this and causing this, quote, war could actually be helpful for them, and it might actually help the entire fast food industry.
Well, David, how would you define success in this new pricing structure and how long it's going to last? What do you need to see in terms of traffic and comp gains to say that this mode actually works for McDonald's?
Well, what the company's talking about is doing this for 4 weeks nationally advertised, and that was what they could get over the hump with these franchisees. The $20 labor out in California. You see something similar in some of the major cities on the coast. Clearly, those markets can't support something that might be 10, 12 points higher food cost margin than what is typical. But they may keep it into many markets in middle of the country, in the South. In addition, they're looking at other value constructs that'll be more of a permanent solution. So there's a lot of gates to go through here. There is a scenario that if this 4 for $5 is successful enough and the food margin hit is less than expected, that the company and the suppliers and the franchisees would come together and rally around this 4 for $5 menu as a permanent solution. But that right now doesn't look like it's the default choice. Later on, they're going to be introducing more premium options. So they need to get their traffic in order for those premium options to really stick the way they want to. So whether it's buy one, get one for $1 or for $5, they need to find a value solution here in the near term.
Meanwhile, David, slightly different note. You've got a good look at negative pricing in consumer packaged goods, Kellogg, Campbell, and what that's going to do to overall comps. I see Walmart's down 2% plus today. Target's rolling out some price cuts on another 3,000 items. Can you talk about what that might mean for earnings season?
That's an interesting cross-reference because as an old McDonald's CEO used to say, that they competed with your refrigerator at home, and they're right. The fast food industry does compete with food at home because over 80%, in fact, it's 85% of our meals are prepared at home. And right now, food inflation has rolled over. A lot of companies are promoting more, hoping to see some volume improvements. Unfortunately, a lot of those companies are spending up on promotions, and the volume isn't turning. And that's what we highlighted today in the note. There's some names that don't look pretty good on earnings today, and their sales are coming in okay. But there's many more that it looks like the promotion's going up, and the volume is just grinding slightly to an improvement, and it looks like we're not on a good path for 2025 top lines.
Pretty interesting. A far cry from the time not that long ago where it looked like pricing had no limit. We'll see what the coming weeks bring, David. Thanks for covering so many bases. David Palmer over at Evercore ISI.